What's up everybody, Nate here, and today we're going to be going over the 3 investments that you need to make today in order to never worry about money again. And if you like this video, make sure to smash the thumbs up button below, sub if you haven't already, and hit that notification bell too. That way YouTube shows our videos to way more people around the world, and I can keep making videos just like this one. Thank you so much for doing that, and now let's jump into the 3 investments that you need to make right now. Now, the first thing I want to go over is why you actually need to make these 3 investments. Investing is very important in our world today, and it's very important that you are financially prepared for what is potentially coming next in the United States. Obviously, a recession is around the corner. Our money is not worth what it was just 2 years ago, and prices continue to go up. So Americans need a whole lot more money, and they're going to continue to need more in the future. Preparing yourself today by investing is the #1 thing that you can do in order to beat inflation and to make sure that all of these monetary and economic problems don't have a massive fallout for you and your family. I don't know what's coming next for any investment. I don't know what's coming next for taxes. I don't know what's coming next in terms of jobs all throughout the country. So it's important that you have multiple different ways of making money and a diversified portfolio. So you are investing in multiple different things and you're protecting yourself other than just making money at your job. Making money at your job is a fine way to make money today, but we don't know what's going to happen in the future, which is exactly why you need to make these 3 investments. That way you don't worry about money in 2022 or beyond. So with that being said, here are the 3 things that you need to invest in right now. The first is real estate. So when we talk about real estate investments, we're going to split this into 2 categories. We're going to talk about the active real estate investing side, and we're going to talk about the passive. The active is all about buying a property. This is the process of you actually going out and buying a home or a multifamily unit or a commercial property and then renting out spaces to tenants. It's a way for you to make monthly income every single month. That way you don't have to rely on your job. Now, when we talk about active real estate investing, this is you actually going out and purchasing the property and doing all of the nitty-gritty things. Like if you have a problem with the property, if a tenant has a problem with their renting space, well, that is all going to be handled by you. This is why it's an active investment. You can purchase the property and you're going to see some residuals from that, but at the end of the day, you have to be involved every single day. Now, buying your own property outright can be a little bit difficult for a lot of people because there is a lot that goes into it. You have to pay upfront costs. You have to buy a property like you would your own personal home. All of those things have to be done by you, and the process can be very long. But buying real estate in this way also has a ton of benefits because the real estate market in the United States traditionally has always gone back up. Real estate, single-family homes, multifamily homes, and commercial properties are something that a lot of businesses and individuals value in our society. They want to have those homes, so there's always going to be a really high demand for them, meaning the appreciation goes up every single month. Now, when it comes to actually making money with real estate and an active real estate investment, well, the #1 way is renting out that space to a particular tenant. This is where, for instance, if you were going to buy a single-family home, you, instead of living in it, would now rent that space out to an individual. Every single month, they are going to pay you in rent payments. Those rent payments are going to go towards the house, they're going to go towards the mortgage, and of course, they're going to go towards your income every single month for you to invest or to buy more properties. The first step is actually going out and finding your property or this real estate. So when you are thinking about getting into real estate from the active side, you have to think about the particular neighborhood and the particular area in the country that you want to invest in. My advice would be to invest in an area that you know. Invest in an area that is up and coming, a place where people want to be and are probably going to want to continue to be in for the long haul. This kind of gives you a little bit of security in case you have a tenant that doesn't want to stay year over year, and it's a valuable area. So people are going to continue to want to live there no matter what. So that is the first step. You want to look at things like the income in that area. area, and also the crime in that area, schools, and all of these different things that potential tenants would be interested in and would want to know more about. What makes that area so good? Why do you want to invest in there? Don't invest in somewhere that you don't really know the area, because if you do that, then you're just going to be very confused. That area might have a lot of problems, or it might not be somewhere that you really want to be in. So really think about the area. Then think about the actual property that you want to buy. Do you want to buy a single family home? Do you want to buy a commercial building? Or do you want to buy a multifamily home? These are all going to make a big difference, because it's all going to depend on how much income you can actually get and the values that the individual tenant is going to be after. You have to consider all of that before you even think about getting any money or anything else from your real estate property. A real estate agent is really going to help you here, so you'll definitely want to find a really good one. They can give you all of the insight on the area, and they can tell you what other individual properties are going for and what other properties are renting for, which is going to help us with the second part of this entire process. Number two, you need to figure out how much it's going to cost you. Once you have kind of what you're looking for in mind, the area and the home type that you want to rent out, well, now you need to actually think about what it's going to cost. So the best way to do this is to use something called the 50% rule. Do your research online to figure out how much you can actually rent a particular property out for, and then multiply whatever income you're actually going to get. So if you could take on a mortgage for around $800, that is your cost to actually run the entire property. Then you need to consider all of the other costs associated with that property. So if anything bad happens, if you have some maintenance that needs to be done to it, or you have to get it up to a position where it can be livable, all of that needs to happen, and you're probably going to have a lot more bills if that was the case. So multiply your total income that you can expect to receive from that property by 50%. That is the cost that you're going to take on, minus your mortgage and other associated costs like insurance and other routine maintenance. Next, step 3 is looking at the loan that you want to use in order to buy this property. There are a lot of different loans out there, and depending on which one you choose is all going to depend on the type of property that you want to buy, and also how much you have to put down on that particular property. When you buy a home for yourself or as an investment, you have to put up a certain amount of closing costs. These can be anywhere between 2 and 6% of the total selling value of the house. In addition, you have to put down something known as a down payment. That's how much you're actually going in on the house initially, and it will decide how much your mortgage actually is every single month. So if you're buying a larger unit like a commercial property or a multifamily home, you might have to put a whole lot more down because the property is typically bigger. However, a single family home, you can use other types of loans like a conventional 30-year mortgage or an FHA loan. These allow you to put a lot less down, and if you're willing to pay a little bit more every single month, then this might be something that is really worth it to you. But again, talk to your real estate agent and figure out how much homes are renting for in the area. You don't want to take on too much cost right now, because if this is your first property, you don't want to have your income in the negative. You need to be able to make as much as what a tenant is expecting to pay. And then finally, you are ready to go out and buy your home. So this is going to be a back and forth between you and the real estate agent that is selling the property. Use your realtor to really talk over and get you a good deal. Consider things like the condition of the home and the area and what other homes are selling for. All of these things are going to help you negotiate, so that way you can get the best price possible for that home, and you can save a ton of money, so that way you don't have to charge your tenant as much either. So that is basically the very simplified guide on how to invest in an active real estate property. Now, if unclogging toilets or staying up till 3 a.m. with your tenant is something that you don't want to actively manage every single month, well, then you can opt for something known as a crowdfunding real estate source. This is a great real estate alternative because it allows you to make money through real estate without actually managing the property yourself. You are going to essentially invest in a real estate investment trust or a REIT, buying a share of that particular property, and you can continue to buy shares of that property for a very long time. You're going to put money into a portfolio of a group of different real estate investment funds that are going to pay you every single month in dividends or every single quarter. It's a lot easier to get into real estate this way because the upfront costs aren't there. When you buy an active property, you have to put all of this money into it because you have to put down your closing costs. You also have your down payment. It's a lot all up front. And if you want to sell that property right away, well, that can be difficult if there's not a whole lot of buyers. So with a REIT, you don't have to worry about any of that. You can just invest a small amount in shares, somewhere between $100, $500, and $1,000, and start investing in a variety of different properties. And like I said, this investment is completely passive because you're not really doing anything. It's all managed outside of your control, and you get paid in monthly dividends every single month or every single quarter. Now, it does have its cons because you don't get to choose everything that goes into the fund, and you do have to stay in a lot longer because these are considered long-term investments. You don't want to jump in and just throw money into an investment and then sell it because properties need money to continue to grow, and the platform is going to want you to continue to put money in for a specified period of time, usually around 5 years. So whatever you're thinking about, a real estate investment is a great way to never worry about money again because you're getting monthly payments every single month, or like I said, every single quarter. And the value of those things are going to continue to go up while the value of our money continues to go down. That way you're always beating inflation. And the ways to make money with real estate is, like I said, actually going out and selling that property. So if you don't want to rent it out, you could just hold on to that property for the long term and then sell it at a later date. I wouldn't necessarily recommend this because you're not going to see any money for a very long time, and we don't know what's going to happen in the future with taxes or the real estate market, and properties typically have a lot of problems with them, so you might end up putting a lot of money into that property and not seeing a whole lot of money come out. Then of course you can make dividends. So dividends are going to be through REITs. Every single month, the income that those properties are getting, all of that money is going to go back to the investors. That's how they make their money, and it's a great way for you to make money because you don't really have to do anything. You just have to continue to passively put money in every single chance you get. And then the last way is to get rental payments. So if you put a tenant into your property, now they have to pay you. Instead of paying the bank for getting their mortgage, they are going to pay you. And the second investment that you need to make right now in order to never worry about money again is an investment in the stock market. So when you buy a stock or a share in a company, you are essentially buying ownership of that company on paper. So you're not actually going to get to say whether the company does one thing or whether it does something else. You don't get to actively be involved in that company, but you do technically own that company on paper, and that allows you to make some minor decisions in shareholder meetings and some minor control depending on how many shares of that company you actually own. The price of a share is all decided by supply and demand. That's why you see the stock market go way up and you see the stock market go way down. If a lot of people want a particular stock, then the stock price is going to go way up because there's only so many shares available. Buying a share of ownership in a company nowadays is easier than it pretty much ever has been in American history. You simply need to download one of the many free apps and then start making trades. Buying and selling is very easy, and you don't need a whole lot of money to begin because a lot of them offer fractional shares. So why exactly is stock market investing super important in today's economy? Well, the longer you invest, the longer your money has time to do something known as compounding. Every single time you put money in the stock market, it grows in interest. It grows in appreciation. If it does this over time and the more money you put in, all of that money continues to just compound on itself. So it might not necessarily be doubling, but it goes from say 2 to 4 in a year, and then 4 to 8, and then 8 to 16, and you can see how it goes up. It compounds all of the money that you put in there times the appreciation of all of those individual shares. This is a completely passive investment on your part. All you need to do is purchase those shares and then just let them sit for the long haul. You don't need to touch them. You don't need to sell them in the short term. If you have a long-term mindset and never want to worry about money again, letting them sit for 10, 20, and 30 years could possibly mean gaining millions of dollars in the end game, depending on how much money you start putting in. Now, the ways to actually make money through a stock market investment are pretty simple. You can simply hold on to multiple different shares of a company or shares shares of an ETF or an index fund, which is just a group of different assets like stocks, bonds, and commodities, and then you can sell them once they've appreciated in value. So for instance, if you buy a stock for $10 today and it grows in appreciation to $100 in 5 years, well, then if you go to sell it, you've made $90 off of that stock. Think about it if you do this for the long term. If you hold on to assets for 10, 20, and 30 years, well, then you might be able to sell your entire investments off for hundreds of thousands of dollars. This is how people retire, and this is exactly why generations hold on to these assets for a very long time. The key thing here is that there's always going to be a huge value in the stock market. People want a lot of different assets. They want things that are going to beat inflation, and stocks are a great way to do that. If they continue to appreciate in value, then you're going to make money off of that investment in 20, 30, and 40 years. Nobody really knows what happens in the short term with the stock market other than that it's very volatile. It's hard to make money as a short-term trader or a short-term investor in the stock market because money goes in and out very quickly, but over time, the stock market goes up. We're going to see crashes and corrections, but in the long term, the stock market always comes back to set new record highs. For instance, since the S&P 500 was founded, which is one of the major indexes on the New York Stock Exchange, well, investors have seen an average 10% return. That is pretty much higher than inflation has ever been in American history. So the key takeaway is as your money sits there, it's going to continue to make you a whole lot more money. And the other way to make money through stock market investing is through dividends. Same like you would with an investment in real estate. As you invest in something, well, that business, if it has any additional profits left over at the end of the year or at the end of a quarter, all of that money gets redistributed to its investors. So depending on how many shares you own, you are going to see a cut of those dividends, and you can just continue to reinvest those dividends so you can get a much bigger compounding effect on your money. This all ensures that you have a lot more money than what inflation is and a lot more money than what the economy is. Your money is growing. It's working for you. You can do this with real estate, and you can do this with the stock market. And the third and final way that you need to invest in right now in order to never worry about money again is to invest in yourself. I don't hear a lot of people talking about this, but an investment in yourself is the first and foremost thing that you need to do with your money right now and with your time. Time is a valuable asset. It's actually one of our most valuable assets because it's something that we don't get back. Once it's spent, we can't get it back. So you want to make sure that you're using your time effectively on learning and educating yourself. So that way, when you have opportunities in the stock market or through real estate or just in your own money management, you know how to handle your money. This always ensures that you're going to be making a lot more of it instead of spending it on things that are going to continue to lose you money in 2022. Now, while you might not technically start making money with education or with resources right away, like I said, this gives you an opportunity to put yourself in position to make money when money starts coming your way. Opportunities will pass you by if you're not ready, but the fact of the matter is you wouldn't be given the opportunity if you weren't ready to capitalize on it. So you need to be able to make more money when these opportunities come around. And there's always going to be opportunities to make more money in our economy. And it always means that you're on the cutting edge of everything. You can see what the Federal Reserve is doing and what our federal government is doing and what the stock market is doing and make intelligent decisions with your money. You can actually decide, well, I'm going to put my money this way, I'm going to allocate funds in this way. If you don't have an education, then it doesn't matter how much money you end up getting. Throwing your money into real estate or throwing your money into the stock market isn't going to mean a single thing if you don't have the resources, the education, and the mindset in order to back yourself up. Eventually, you are going to lose all of that money because you don't know how to handle it. You don't know what to do with it, and you're just going to spend it on things that you don't need. And this is something that you're probably going to end up doing for your entire life. You have to continue to invest in yourself, invest in the people around you, because that is the only way to consistently make money. Nobody knows what's going to happen with real estate. Nobody knows what's going to happen with the stock market. But if you make yourself a financial education tool, well, then you can basically unlock any single door. That gives you an opportunity to make money, and by knowing the real estate market and the stock market, you basically know how things function in the United States, giving you an opportunity to make money no matter what our economy is doing in times of high inflation, in times of a recession, no matter what. That way you never have to worry about money again. You're always in the position to make more, and you're never put into a position where you're not making money at all. You don't have to rely on just your job. You don't have to rely on one single investment. You know that you need to have a whole lot more going on in order to be successful and in order to make a strong income in today's economy. And that will ensure that money is always coming in. So an investment in yourself basically just protects your finances for the long term and always ensures that you stay one step ahead of the competition. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.